I will now turn the call over to TGI Chief Financial Officer, Mr. Santiago Pardo.
Good morning, everybody. This is Santiago Pardo, CFO of TGI, and first of all, thank you for your participation. And we're gonna try to go over in the next few minutes our results for the fourth quarter 2013 and the whole year, actually, of 2013. So moving on to the agenda, what we'll try to cover here today is, first of all, a very brief overview. Most of you are very familiar with the company, so I won't spend a lot of time here. Then we'll go over a couple of key updates that we had. Then we'll review the financial and operating highlights for 2013 and talk about the expansion projects that are underway. And then we'll open it up for questions. Going on to the overview, in pages, let's move to page 5, actually. I mean, as you all know, TGI is basically the largest natural gas pipeline company in Colombia. We own approximately 60% of the network in the country. We actually own the assets. We're not a concession. So we own the assets outright that do not revert to the state at any point in time. We serve the interior of the country mostly, where the 70% of the population and 82% of the GDP of the country is generated. And we also have access to the main two producing basins, Ballena in the north and Cusiana in the east, Cusiana-Cupiagua in the east, which gives us significant operational flexibility and advantages in our operations. We also own, as you know, 25% of Contugas in Peru, the project that is for a distribution/transportation concession that is currently being developed in the department of Ica in Peru. Moving on to the updates, I first want to spend some time on the acquisition of TGP. If you recall, about a month and a half ago, we had a conference call in which we announced the signing of an SPA to acquire 100% of 23.6% of TGP and 100% of Koga from TGI. That acquisition was subject to a preference that other existing shareholders have. The process of offering to those other shareholders began on January 17th. We had, as you know, talked to all the rating agencies prior to announcing, and we presented a financing plan that entailed approximately $270 million in equity and which was cash on the balance sheet, and $380 million coming from a syndicated loan. We had that all in place ready to close the acquisition. And on February 18th, we were notified by TGI that one of the other existing shareholders in TGP, which is CPPIB, have decided to exercise its right to purchase the stake in TGP that we had agreed to acquire. At this point in time, we're kind of still evaluating our options with regards to this, but obviously this makes the likelihood of something closing very, very highly unlikely. So the likelihood of this transaction going forward is up in the air right now. As you said, we're still going through options, et cetera, that might be available to us. But we want to let you know that as of February 18th, the likelihood that we will close this is not very high. Moving on to the next page is an update on the Cusiana Pia y San Fernando project. This is a project that we have been working on with Ecopetrol for about 2 years or so. We had signed an MOU to develop engineering with Ecopetrol for TGI to develop engineering, basic engineering studies to finalize budgets prior to making a final investment decision on this. After going through those basic engineering studies, the budget was estimated at $268 million. We communicated this to Ecopetrol late last year. In February of this year, we had a series of meetings with Ecopetrol in which they informed us that they had decided not to go forward with this project as we had initially contemplated. The project was supposed to bring gas to a series of power plants that Ecopetrol was either building new or repowering in the San Fernando, Ocoa, and areas in the eastern plains of Colombia, where Ecopetrol has significant oil extraction operations. Ecopetrol has now apparently changed their plans and are now looking to probably construct a major electricity plant in Cusiana and have transmission lines go to the places where they need the power. So they will they are canceling part of the expansions and the new plants that they were considering. However, they are still looking to continue expanding the capacity of the repowering of Termocoa and Termosuria, and will still need 20 million cubic feet a day of additional capacity along this pipeline. This is in comparison to the 70 million cubic feet a day that we were contemplating before. So obviously this forces us to reevaluate the configuration of the project. One thing we are doing currently, and I'll talk about this in more detail later, is we're in the process for looking for additional shippers in this in this pipeline. And actually, on March 4th, this Monday, we had a meeting with all our customers, including Ecopetrol, in which we presented them a series of projects that we are currently contemplating and that we have on the drawing board, including the expansion of the Cusiana Pia pipeline, to basically solicit interest from them in acquiring capacity in these projects, and if they decide to acquire capacity in these projects, this will make the projects viable, and we can move forward. So I'll talk in more detail about some of the projects that we presented towards the end of the presentation. But this is kind of a process that we're following with the customers so that we can basically put our new project development pipeline on more solid ground and continue moving forward with the growth strategy of the company. Moving on to the financial and operating highlights for the year. Page 10 shows our operational performance. I think in essence we had a pretty good year in 2013. We did not, even though we did not bring any new projects on stream in the new year during the year. As shown by network length and capacity graphs, we did manage to increase our contracted capacity, which is what drives our revenue. So we increased our contracted capacity from 604 million cubic feet to 624, and this is actually what drives the revenue line. Now, I mean, and one other thing we did during the last year is we followed the process that is contemplated in the regulation. That is, we basically found that we have some additional capacity in the pipes that was not captured in the capacity that the regulator allows us to sell. So we followed a process that's contemplated in the regulator, in which we basically had a third-party expert verify our capacity number, and we were able to increase our capacity by about 12 million cubic feet a day in certain points in the pipeline that were bottlenecks that were preventing us from signing more contracts. So we did that. We got the certification towards the end of last year, and it's now firm and in place. And this has enabled us to, during the first couple of months of this year, to significantly increase our contracted capacity. So as of the end of February, we are at 649 million cubic feet a day of contracted capacity versus the 624 we had in 2013. This is close to 90% contracted capacity as a percentage of our total capacity, and we're basically approaching kind of the limits at which we can contract the pipe currently. In terms of transported volumes, during the year, we increased our volumes by 7.6%, from 422 million cubic feet a day to 454. This was due to strong dispatch in the power plants. As you know, in Colombia, power plants that are gas-fired are at the margin and not dispatched as baseload. And so last year was a relatively a year in which there was a relative need for more gas-fired generation, and so that showed in our numbers. That gives us a nice additional revenue, but as you know, most of our revenues are based on fixed capacity, so variations in volume do not impact us very significantly. But if we have increased volumes, this gives us a nice 1 or 2% additional revenue in our financials. Moving on to the next page, we were able to maintain our market share at close to 49%, vis-a-vis the other companies. Promigas is obviously the second largest with 36%, and the other smaller companies represent about 15% of the gas transported in Colombia. Moving on to page 12, I think as you all know, we have a very stable revenue stream, as I mentioned before. Most of our revenues, 98% of our revenues come from the regular tariffs that are reviewed regularly by the regulator. As you know, our tariffs, we're at the very early stages of the new regulatory cycle, which we started applying new tariffs starting in the first quarter of 2015. So that was one of the factors that drove our revenue growth. And 84% of our revenues come from fixed tariffs that are take-or-pay and not subject to variations based on volume. And even the 16% or so of our revenues that are based on volume, they still exhibit very stable and not very volatile patterns, because as you can see from the graph, about 72% of our revenues come from industries or customers that have very stable consumption patterns. As you can see, the distribution companies are 57% of our revenues. Those are the customers with the most stable consumption patterns, because there's no seasons in Colombia, and the variation in demand from the distribution companies is minimal during the year. Then we have the refinery of Ecopetrol with 8%, which also is very stable. It needs to be on all the time. And then you have vehicles, which also have stable consumption patterns, with about 7%. So those three together make up about 72% of our revenues and provide a bedrock of stability to our revenue generation. As you can see in this slide, 17% of our revenues this year came from the power plants. And if you look at this, check your old presentations that you might have, that number last year was about 10% in terms of what the power plants contributed. So that is basically a consequence of what I mentioned earlier, that there was a relatively high dispatch of power plants. As you know, our contracts are long-term contracts with more than 8 years of average life remaining, and we have about 5 customers that represent about 75% of our revenue base. The most important being Gas Natural, followed by Ecopetrol, Gases de Occidente, which is the distribution company near Cali, Empresas Públicas de Medellín, and Isagen being the 5 largest customers. They said representing 74% of our revenue base, and all of them have long-term contracts, and all of these are blue chip names that are either AAA locally rated or investment grade internationally. So we're very happy with the mix of our customers, and although we have maturities in those contracts coming up in 2020, at the end of 2020, we do not foresee any problems renewing them because, as you know, the capacity in the pipe is limited, and as we approach the date for renewal, probably 2 to 3 years before, our customers will want to make sure that they maintain their capacity, because if they lose the contract, if they lose the capacity that they have in the pipe to another customer, then they cannot run their businesses. Moving on to the financials. As I mentioned before, we had a pretty good year in 2013. We had 19% revenue growth measured in US dollars, from $291 million to $465 million. This was driven partly by the new tariffs, but also by the fact that our contracted capacity increased significantly during the year. We had in 2013 the first full year of revenues derived from the contracts associated with the Cusiana Phase 2 project. This gave us a very nice addition to our revenues. And then we had the additional 1 or 2% that I mentioned, that the increased volumes gave us. So that resulted in revenues that were 19% above. If you look at as in the long term, we've been able to post very strong and consistent growth rates. Our CAGR of revenues for the last 5 years is approximately 14%. In terms of EBITDA, our EBITDA grew by 23%, and this was despite taking a 6-month one-time charge for the cost that we had incurred in the development of the Cusiana PI San Fernando project, and despite the fact that we had increased costs due to the relocation of our offices from Bucaramanga to Bogotá. So despite those 2 hits, we still were able to post a 23% increase in EBITDA, and an increase in the EBITDA margin from 75% to 77%. The budget we had for the year, to give you an idea, was about $325 million. So we beat our budget by approximately $34 million. And in terms of cash flow generation measured by FFO, well, you see it almost doubled during the year to $266 million. The CAGR of FFO for the past 5 years is 26%. And in terms of capex, well, I mean, as we finished the expansion projects in 2012, obviously the level of capex decreased substantially during the year to levels of about $35 million. In terms of what we expect for this year, we expect revenues, and since we don't have any new projects coming on stream in 2014, we expect revenues and EBITDA to be relatively flat. And FFO will decrease a little bit because we will be losing some of the tax loss carry forwards that we have been able to apply in the past. We have been able to fully apply them, and so this year we expect to pay more taxes than last year by about $40 million. So that will impact our FFO, and CapEx will be slightly higher to around levels of around $80 million US dollars. This should still result in very strong net free cash flow generation for the company of about $135 million US dollars over the course of the year 2014. In terms of our figures, you can see that our leverage continues to come down, measured by on a gross basis. Total debt to EBITDA is about 3.5 times, and senior debt to EBITDA is about 2.5 times. If we measure it on a net basis, it'll be about 1 turn less. We had about $364 million of cash in our balance sheet as of December 31st. So basically, you're looking at total debt to EBITDA of 2.5 times and senior debt to EBITDA of about 1.5 times on a net basis. And then interest coverage of about 5.9 times, approaching 6 times. Our debt profile didn't change. The only change to our debt profile is we added about $10 million in debt, which is related to leases that we entered into when we purchased our office space here in Bogota. And but other than that, there was obviously no new debt to speak of during the year 2013. And finally, in terms of the expansion projects, I would like to take a few moments to speak first about the Savannah compression plant, which is one of the projects that we're currently building. This is $55 million in capex, some of which was spent last year. This work is already ongoing. The EPC contractor is already on site, and the expansion should begin operations during the month of August of 2014. Cusiana phase. Now we're moving on to. I'm going to talk about 3 other projects that were some of the projects that we presented to our customers at the beginning of this week. First is Cusiana phase 3, which is basically an increasing capacity of about 20 million cubic feet a day in the Cusiana-Vasconia pipeline, which will enable us to increase the sales to shippers that need capacity along that pipe to move gas further down to places like Cali or to places like Barranca Bermeja or Sebastopol. So this would be for a relatively modest investment of about $33.5 million. We would be able to increase our capacity of by 20 million cubic feet a day by basically adding some units to the Vasconia, Miraflores, and Puente Guillermo compression stations. So this is something that's very simple to do. It doesn't require any environmental licenses because it's within the boundaries of the existing compression station, and we would be able to complete this by the year 2015. Then there's associated with this there's the project to provide the Ballena Barranca Bermeja pipeline with the ability to reverse its flow. Currently, that pipeline flows north to south. By spending about $20 million or less, we'd be able to reverse the flow, or not permanently, but have that pipeline have the capacity to bring down gas as it's currently doing, or when it's needed, push gas towards the north. The capacity that we expect to be able to push towards the north is about 45 million cubic feet a day. Moving on to the next page. This was also a project that was presented to our customers. And then moving on to the next page, in the meeting last Monday, we also presented the Mariquita-Gualanday expansion, which is in the bottom right-hand corner, which would be at a cost of about 90 million to increase capacity by about 13 million cubic feet a day from Mariquita south into Gualanday by constructing a new compression station and some very small loops along the pipeline. So this is also a project that was presented to our customers. Then we have, in addition to that, we have the Eje Cafetero branches, which are loops near Armenia and Chinchina that will enable us to increase capacity in those segments. This is a project that is going forward and that will, for which we are already in the process of contracting engineering studies. This is about $28 million, and we expect to complete it in 2016. And then we have potential adjustments to be able to connect into the pipeline that brings gas from Venezuela. This is a very modest investment that will allow us to tap that gas if we need to. As you know, Colombia currently exports gas to Venezuela, and but in the near future, according to the agreements that have been signed by both countries, the flow of that pipeline should be reversed, and we should start receiving gas from Venezuela. And then we have the Apiay-Usme expansion that basically is related in part to the Apiay expansion that we mentioned earlier. That, as I mentioned, is another project we showed our customers. The Apiay-Usme expansion is like an add-on to that would basically increase capacity into Bogota and provide not only transportation capacity but also reliability to the system. And this for this project, we're also waiting for. This is a little bit further down the road, and we're also waiting for regulatory signals as to the remuneration of investments in reliability that will allow us to make that a viable project. So this is what I have for now. In the appendix, we have the typical information we have regarding our shareholders, the macroeconomics for the country, etc., and some more industry data that will be helpful to you in your analysis. But at this point, I wanted to cut it off here and open it up for questions.
Thank you. We will now begin the question and answer session. If you have a question, please press star and then 1 on your touch-tone phone. If you are using a speakerphone, you may need to pick up the handset first before pressing the numbers. Once again, for any questions, please press star and then 1 on your touch-tone phone. Once again, if you have a question, please press star and then 1 on your touch-tone phone. At this moment, we show no questions. I would like to turn the call over to Mr. Pardo for any closing remarks.
Okay. Well, again, thank you all for participating. Hopefully this was clear, and if not, as always, we're available. Our contact information is at the back of the book of the presentation, and as always, we're more than happy to get your questions and engage in discussions with you as you see necessary. So once again, thank you very much, and I look forward to talking to you in the next few days.
Thank you. Ladies and gentlemen, this concludes today's conference. We thank you for participating. You may now disconnect.